Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this wild Wednesday, and this is the 10th of October, 2018. We're after 5 p.m. Central Daylight Time, which means I'm already into Thursday's trade session. But as you know, grains don't open until 7 p.m. Central Standard Time. You're getting further acceleration to the downside in the stock market. Gold caught a bit of a bid. It hasn't really gone anywhere, but it caught a bid with all this scared what's going on in the stock market break. The dollar's been down. And if you look at bonds and notes, they're getting a bid as well tonight. These are new quotes that are coming in as traders are running for the doors. It's all of a sudden risk-off mentality. Now, when you get a big break in the stock market, it can carry into commodities as traders have a way of just liquidating everything and trying to go back to a cash position when they get scared. There is a USDA stocks report tomorrow. We're going to get our numbers that really start tightening in what our harvest looks like, the bushels per acre, where we're at, what the size of our crops are, and the USDA will update what foreign crops look like in terms of their harvest and where they're at with ending stocks. As you can see, as I pointed out the other day, we got up to 869. The 18-day average, the 18-week average of closes is 856 and a fraction, and you're back under that at 852 and a quarter. So beans fell back from that number, and often you go to that 18-week moving average, and it becomes, if you're coming down, a number that it plays around. If you're up and it falls back to it, it tests it, and then it can go either way. You'll see this over and over on the charts. Does it happen every time? Nothing in life's all the time, but you can see how it fought its battle even back there. So now I go to the chart, and what I'd expect going into the report is traders sort of even up. It's at 11 a.m. Central Daylight Time tomorrow. And you have a pattern now of a higher high but a lower low. So that's a neutral chart pattern. Where's the market gone back to on the daily chart? 850 is the 18-day average of closes. You got down to 847 and a quarter, so you're playing at that number on the close. As you can see, the market is staying within the Bollinger Bands. It tried to push them out, so it maneuvered on getting it up, but it couldn't break out, and nor could it get up to that 100-week moving average of closes. With this report, we could have a whole new set of fundamentals. You don't know, and that's the point I want to make clear to you. You don't know. And we'll see how the algorithm boys and everything handle it after it comes out. Momentum is turned down. You're down to support at the 18-day average, and you're not trending. In the meal market, you have and have had a pattern of a lower low, higher high. More important, we've been stuck in the sideways action here in the Bollinger Bands. My brain's going faster than my head right now. My mouth is. And as you can see, the momentum's turned down. Again, we have a market that's waiting on a report. And in the soybean oil, you lost your embedded reading. And let me take you to that if I could. Yesterday on the close, that's Tuesday, you lost it. That often leads, if it stays lost, to price and the 18-day moving average trying to come together. The 100-day was up here, and that became an area that the market was fighting at along with the upper Bollinger Band. And today, as you can see, you made your run. You didn't quite hit the 18-day average. You could. You're 4 points away from it. The corn lost its trend, but it's very much a sideways market. Momentum was lost. You lost the embedded reading, which often leads to price and the 18-day average coming together. Wouldn't be surprised if that's even tonight, early morning before we get to 11 o'clock. Does it have to happen? No, but often it does when you lose that embedded reading. In the wheat market, lower highs, lower lows. You closed under the 18-week average, and momentum's down. All the parts of this market are bearish. I would expect to see profit taking at that lower Bollinger Band if you can get to it near the 505, and I question if traders are going to go through that report with big positions. I don't know. In the sugar market, We've been talking for 3 days how the market, well, actually for 2, has the market hit the upper Bollinger Band. Today was the 3rd day it hit it, and you have an outside day down. Now, you still have a market that could convert from being overbought to embedding a reading. We'll see. As I mentioned, you got to be careful tomorrow about the fact that traders just start selling things, especially if they walk in the morning and the stock indices are sharply lower. It has, in my experience, doesn't mean I'm going to be right, it has a way of filtering through everything. Coffee, we've talked about the 100-day average in the upper Bollinger Band being the resistance. It still is. It does have an embedded reading. It takes 3 days over 80 to have an embedded reading. So today both numbers were over 80, day before, and I question about the day before that, but I'll give it the nod. If you lose the reading, often price goes to the 18-day average. What I hate to see is on the 3rd day when the market closes in the lower quadrant of trading, especially the much lower quadrant. If you open lower, often that red line gets in jeopardy of turning under 80. In the cocoa market, you've got your market that lost its embedded reading. It's trying to get up to that 18-day average of closes. The market finished up. This is actually not right. It was not up 64 today. I don't know why it's not filling in with today's quote the right way. This market pulled back on the day. It's not showing as high as it got. It got up to the 2130s recently, so something is wrong in the quote there. In the cotton market, we went up the other day, challenged the 18-day average area, pulling back going into that crop report. Cattle market, lower highs, which we've had, lower lows. We've been closing under the 18-day average yesterday, and today you made your run again to that lower Bollinger Band. You're very oversold. You've hit a downside target. By the way, cattle do get impacted, so do hogs, off of feed prices, so tomorrow's report could impact these markets too. In the feeder cattle, lower highs, lower lows. Now, are we going to break out of this narrow Bollinger Band and try more downside? That becomes the big question. This area is a distribution area. It looks more like a top than it does anything else right now. It is oversold, though, and we'll see what goes on from there. In the hog market, look at all this action against the 18-day average. You have a market that's got a pattern of higher lows and at the same time lower highs, and it keeps hitting this 18-day average looking for direction. I'll wait and see what the market says on the grain report and see if that has a spillover effect to everything. But I'm going to remind you, keep your eye on stocks. If they're sharply lower in the morning, that could weigh on a lot of different things. I've already been writing for about an hour and a half, where after 5 o'clock I'm giving traders my thoughts on tonight, what I see in the market, what they might want to do, how to prep themselves. Is this important? We'll take it from there. Remember, you can get my research in 2 ways, commentary only or commentary with trade recommendations. As a trial, and that's what I'm offering you, you get both. But the price of one versus the other is substantially different. One is $25 a month, and by the way, you can get the commentary only for as little as $240 for the year, and I think you'll find that twice a day I give you quite a bit to chew on. In any case, you can call us to get on this. You can go to our website. You'll see our free offerings there. You can click up here, and away you go. I'm Ira Epstein. You have a good day, and I'll talk to you later.